Hey guys, Sam back here with you. So we're getting some interesting movement today in the crypto sphere, and some coins that have been quiet for some time are starting to get really starting to come back to life and get some traction. So a few things to look at here. Now I'm on the crypto the cryptocurrency market overview here, where we can track what's moving today, and I always want to see where the volume is. So when I'm looking here, this is against the dollar, of course, so I can see here that some names that haven't been here for a while with any positive momentum. So we've got Bitcoin Cash, Litecoin, and Ethereum Classic has been moving lately. So these are all billion-dollar plus market cap coins. So when we see this kind of volume coming in, we want to pay attention to it, see if there's any opportunity there. If I switch over to Bitcoin, same thing. Here's Ethereum Classic, Litecoin, and Bitcoin Cash, all showing some real movement today, as well as a lot of volume. So let's have a look, see if there's anything there for us to take advantage of. So I'm going to start with Ethereum Classic, because we've been tracking this in the room here amongst members for the last few days. So let's start with Classic to the dollar. So here it is. Now, when you see this, so when you bring up a blank chart like this, and I'm going to take this off, right? So when the wave count is so obvious that it just jumps out at you, you almost can't help but see it. That's really when you want to stay, really be paying attention and stay, on top of a coin that's giving you that kind of price action, because that's exactly what you're looking for, right? So, I mean, there's so many people that are holding alts right now that are struggling and trying to justify continuing to be holders. I get a lot of requests for people, would you look at this coin? Would you look at this coin? I'm so underwater. I'm just wondering if there's anything happening there. Right? So the first mistake as a trader was letting yourself get too far underwater. If you're a long-term holder, well then, you've made a decision to commit capital there for the long term because perhaps you like the fundamental story. So the fact that there's no technical pattern there to work from other than long sustained downtrends, there can be, the traders lament there, and the wishful thinking is, maybe something's starting to happen. Whereas if you're looking for fresh opportunities, you want to go where it's the most obvious, right? So, why make it hard on yourself? So pulling up Ethereum Classic here to the dollar on Poloniex, I don't have to work too hard to find an Elliott wave structure, or at least some sort of a breakout. And, is it technical? Well, just pulling some fibs. This is a rather easy one to spot. So we get this nice first leg up, we get a tight little second, and then we subdivide just perfectly to complete a third. So so market's in play. How about we think of it that way, right? So we're seeing, so it's technical. The market's in play. Now this is a trade that we are in. The members are in, that we've been tracking this, and this is not a difficult trade. So all I'm doing is pulling a retracement from the second to the third, and look where we go. We're right to the 50. Now on top of that, because I always talk about looking for confluence, right? One fib relationship, not enough for me. I want more than one, because if I'm putting capital at risk, I want to stack as many things in my favor as I can. So in addition to the fact that we're at the most common retracement point here, where we know algos are likely to be buying here at the 50, we've got the 100% of the A wave projected from the B wave. That's also the most common price relationship for a correction. So we get this nice little pocket here, this little window here, where we can enter this with very low risk, right? I mean, you could give this more room, but I like to keep the risk moderate, because I'm trading this on the assumption that I've got my pocket in, I've hit that support area. I mean, literally split the difference between the 50 and the 100, and we've got a little reaction. So if that's the low, and based on this analysis, if that's right, you can tighten up the risk here rather than keep it all the way down here below the wave one high. Now, if you really want to be aggressive, or you want to start small and look to add when you get confirmation that this is going to be a good pivot, you might wait for a little more distance from this pivot before moving your stop. So that's sort of the individual's choice. We've tightened it up just a little bit there. So here's my first target here. That's my negative 23. That's my algo target. So if they're in and they're buyers here, this is the first place they'll look to take profit. So just on that, well, there's 7.7 to 1. If I'm still holding below the 618, there's 4 to 1. So that's just a nice, simple, straightforward. You don't need to be an Elliott wizard to take this. You could pull the Elliott off and just look from pivot to pivot. Boom, there's a 50. Take that trade all day long. Right? It's not complicated. It is not complicated. Now, here's where it gets kind of sexy. Take a look at this. This is why I always encourage you, when you get pivots, always check to see if the pitchforks are in play. That's from my 1 to my 2. Look where we top on the 3. To the tick, right to the median line. Look at the 3, to the tick. So when you see this, that's a tell that the algos are in. So only a machine can do that. That's not happening because Crypto Billy or Crypto whomever is taking profit there, right? That does not happen randomly. So, and we come back, where do we go from here? Now we go outside of the pitchfork, but we come to the most typical place that you'd expect the retracement to go is right to the 50. Now, that doesn't mean that this is a guaranteed winner. That's not what I'm saying. What I'm saying is this is a trade you take 100 out of 100 times. And if you do that, not every one of them is going to be a winner. This may not be a winner, but I have a high probability trade here. That's all you ever get. That's all you ever get. No guarantees, no certainty. All you ever get is probabilities, and you look for a reaction to be a tell that you've got algo activity. All you're trying to do is just get right in their wake and just surf right behind them. That's all you're trying to do here. So we've got, the first target is here, but of course, if this is going to go, if we're in the start of something that's meaningful, remember I'm on a 1-hour chart here, so there's a lot of potential upside here. Something more meaningful, if we're going to go up to the 618 and get a good 5 on this relative to the 1, because I've got a fairly good distance in my 1. Let's project and see what the potential is. So if I take my currently labeled wave 1 and I project from what could be my wave 4, well, here's my 100%. Here's my 127. Here's my 1618. So I got some nice juicy upside targets here if something meaningful is starting here. And that's, up to 18. Now we're at 7 to 1, maintaining the risk below the 6.5. If you're tightening up, there's 14 to 1. If it starts to roll, you get even tighter, there's 17 to 1. So again, the point is the consistency. And managing the risk. I'd rather get stopped out 3 times here if I have to, and then pull that trigger on the 4th time, which I'm comfortable doing, which partly comes from experience, knowing that the probability remains here unless this wave 1 gets taken out. Now then I may have a diagonal. I'd reevaluate. But if just off of this pivot here, if I break the 6.5 and I break this wave 1 high, then this count is potentially wrong. So, but there's no reason to be taking big risk here. Why would you do that? There's just no reason to do it. If we take out that one wave, we do not have an impulse, right? And that changes the complexity of the trade. All right, I think I made that point. Let's just be, for comparative sake, let's look at it relative to Bitcoin. So here it is, a Bitcoin, where literally this is tradable as I'm recording this. This is absolutely perfect right here. So here's your target. Now take note here that it's slightly different. You can see I've got this pivot, wicked here, where I've got that marked as we're potentially coming into some structural support here. But we have a very clear, clean. We get an impulsive 1 wave. We get a technical retracement, right? So we can check that. We can go from our 1. And look at it and say, oh, okay, well, we went right in the pocket between the 38 and the 50. That's actually a little shallow for a second, but that flies, and then it rips. And we go from there to and through the negative 23. We go to and actually through the negative 618. So we've got some juicy targets up here. But as we sit here looking at it now, let me pull this off just so you can see this a little more clearly. Look at this nice structure that we have here. So we're sitting, here's the 200% of the original pitchfork. Right, so sitting right here, we're literally just sitting at the 382. This is a 1-hour chart, and we've just been sitting here. Now, this could easily go to the 50. It could easily do that. But I like this structure here. I like the structure. I've got a little bit of subdivision. It's not the best I've ever seen. If I take this down, let's go to a 30 and see if we can see it there. You know, I've got some subdivision here that's not terrible. So I may have an A, B. You know, there's potential that this could go down and look for the 50, but you know, we're talking about that's a very modest amount of risk. So you could be taking a partial here at the 38, anticipating a potential test of the 50, where you put the second half on. Stop below the 65, which would invalidate the count if you take out the 1. And now you'd be to and through the Vegas wave, to and through the fib structure. So you're wrong there. Right here, that's again my point being, you take that trade 100 out of 100 times, and as I said previously, you're going to get stopped out on many of those. But the consistency of that approach with the technical pattern that repeats like this, you're going to be in good shape. The profit will take care of itself. So sitting here now, I'm already in this trade. We're in this against Bitcoin and the dollar because the technical is so good. So if we're going to go back up and visit the median line, which now remember, the median line gives you a time component. So if I'm going to go to the negative 23, I'm going to hit that. Now, you know, that's incomplete to the median line. I'm looking for a test, a return to the median line, which now puts me up here at potentially the negative 618. Which takes my upside. Now I'm looking at this. Now there's 3.3 to 1. And if I want to be a little tighter with the stop, I don't like that as much. I want a little bit more for my risk. I can be on the other side of the 50. There's 5 to 1. The point is, it's just stalling here. So there's indecision here. We've got this structural support. We're at the 38. Between the 38 and the 50, the most common place to find a wave 4, and I've got the nice support from the 200% of the pitchfork. That's a trade you take, right? Win or lose, it almost doesn't matter. What matters is the discipline to consistently take that trade. Right? And you can't be discouraged if this ends up being a loser. Again, you have to come back to it and take it the next time and the next time and the next time, and I promise you the profits will take care of themselves. All right, let's go over to the other one that was moving today was Bitcoin Cash. So I've got it here. So here's Bitcoin. Let's look at it against the dollar first because I think the count is cleaner here. So here I'll pull out to the 4 hour so you can see how I got here. So if we go to the 4 hour, you know, we've had a fairly good reaction here from this long sustained this trend that we've been in. First, here's the pop to test the Vegas wave. Now we get through it. So looking here, well, can we spot something that's easy? You know, why make it hard? There's so many choices. There's so much to trade, particularly on a day like today. Why would I force a trade? I want to go where I can see it the most easily. So I can certainly carve out a 5-wave structure there, and now we're starting to correct it on some degree. You know, this potentially can change, but I can look at that and see, okay, well, clearly I got a 1, I stay technical on the 2, I get a nice 3, here's my 4, I don't overlap the 1, there's my 5. Beautiful. Okay, so that's something I can work with. So I've got a completed 5-wave structure. Well, now, if it's completed, I'm looking for a retracement of the entire move. Okay, I'm not looking for the 4 like we were with Classic. We're looking for a retracement of the entire move, and I'd want to be looking down here around the 50. You know, and as this starts to move down, Vegas wave's likely to move up to meet it. So I have potential entry zone right here at the 50. So if I look and say, okay, if I'm here at the 50 and this is going to set up, so this is 1 to be on your radar, there's my first target. You know, if you want to give it maximum room, there's your 3.8 to 1, 4 to 1 right there, really a tick or two below the 618, which would be an extreme. But, you know, that's not uncommon for a second wave. I don't care about the 1 because I'm operating on the assumption now that this 5-wave sequence is complete. Now I'm looking for the 2. So if I go down to the 1 hour, okay, well, now here I can see a nice 3-wave subdivision. So is it complete? Is this my 4? Well, could be. This could be the 1, 2. You know, it's hard to say here, right? So you ideally, because we're operating on the assumption that the 5-wave is complete, we want to be a buyer down here at the 50. So then we'd look for something more like this. So this would be our A, this would be our B, and our C would come down here. Well, can that work? Well, you draw it up, you have a look and say, well, can that play? Does it stay in this channel? Do I get, let's look at it here from this structure to this structure. Well, maybe this is one to pay attention to. There's the 38. There's the 38 and the 100%. I'd be wicking this high here as well. I'd want to pay attention to that as potentially some structural support. Maybe you put a pitchfork on it as well, right? I mean, not maybe, I definitely would, to see if that's going to give me anything. Well, now I'm looking, potentially a little bit lower down here. That's what I'd like to see, potentially down to the 50. All right. So last look would be on the on cash to Bitcoin, where we have the similar kind of a structure here, where we have the possibility for a completed wave 1, and now we're starting to set up that correction. I'd be looking for entry here. Note down here, if that's completed, I'd be looking for entry here at the structure. And take note here, we've got this good structural potential resistance becoming support right at the 50, right in sync with the Vegas wave and the 200%. So these are all trades to be on your radar. You want to alarm these, watch them. And again, when you get that confluence of price pattern, geometry, fib relationships, that's when you pull the trigger. All right, guys, I'll wrap it there.